Summit, and this is Breaking the Mould. It's our regular market review show with, of course, our investment research director, Russ. Russ, we're here for another week. What's the fuss?
The fuss this week, Clara, it's all about gambling. Now, before I go any further, I might get a little bit serious with you all. Investing money in the stock market is not, in my opinion, gambling. Nothing could be further from the truth, so long as you do your research, you make sure that you understand what the company does, you trust the management team because they're in the end looking after your money, and you pay the right price or the right valuation for the stock. Then you're investing. Without doing all of that homework, you're certainly speculating, potentially gambling.
Well, that is a little bit serious, but now you've got that off your chest, what's the angle on gambling stocks for investors?
It is an enormous time for the gambling industry because in America, online casinos are about to be made legal again after a 7-year gap. Now, the American authorities banned it, arguing it was naughty, immoral, whatever their view was. Now that they actually need to generate some serious tax dollars because they're all skint, they are about to legalise online casinos again for the first time in a very, very, very long time.
So that sounds really promising. Who's going to be involved?
There's lots of UK listed companies who are actually potential beneficiaries of this. Betfair, 888, BWNG Party, you're all right in the van. You've also got the Irish bookie, Paddy Power. They're not too far behind, though they do need a local partner before they get a licence to operate. So the stocks haven't really begun to motor yet. In anticipation of this, I guess people are waiting to see how it works out. It all goes live on Tuesday, the 26th. And then the numbers they could make really are quite big, particularly because it won't be just New Jersey. New Jersey is first, but there are rumours that California is already looking, for example, and once one state goes and sees the tax money coming in, they all might start to think about it.
Ah, we could all do a little bit of dreaming there, couldn't we?
Yes.
Is there anything else that we need to be looking out for?
Yes, we've got a very meaty Monday coming up, the 25th. We've got 2 agriculture players reporting numbers. Zambeef, full year figures. Now that's actually based in Nigeria, Ghana and Zambia. Does beef, poultry, chicken, eggs, full range of agricultural products, from field to fork as well, really. They actually put up a bit of an indigestible profit warning a couple of months ago, so they'll be looking to reassure people that they're over a bit of a meat contamination scare, I'm afraid, and also some rising wheat prices. You've also got figures coming up from CRANSWICK, not based in Africa, based in Hull, so a little bit closer to home. They're a leading provider of pasties, prepared sandwiches, pork, processed meats. Very powerful in that area, actually big enough to stand up to the big supermarkets and hold prices, which is quite an achievement in itself. Their numbers in October are a little bit chewy on the interim statement side. So again, they'll be looking to reassure people their margins aren't coming under huge pressure because they can start to get prices going up again. Now the market's looking for broadly flat earnings to March 14. To March 15, consensus is looking for an 11% increase, but on both occasions, the expectation is increased dividends.
Okay, so we're talking about that income theme again.
It's a really big one.
Are there any other stories that we need to be looking out for in the next fortnight?
Yes, definitely. KCOM is the name in the dividend frame in the next fortnight. Actually has a local monopoly on telecommunications in Hull, that town again, but also has a nationwide IT services business. Now the company's actually targeting 10% dividend growth for each of the next 3 years. Now the market's frankly still a little bit sceptical, though the share price is starting to tick up. So really when you look at the numbers, we'll be looking for, is CapEx coming down, investment in fixed assets? Is the pension deficit coming down? And is the IT services business's profits going up? And if you get that magic combination, I think the market really will start to believe a lot more firmly. And if you think about it, at around 110p, then you're talking about a 4.5% yield this year, 5% the year after, 5.5% the year after that. They're all quite big numbers.
They are. So all of that might set the tone, but is there anything else that we need to know?
Can I talk about Christmas?
Go on then. Yeah.
All right, 25th of December, we all know it's coming, 30 odd shopping days to go. And clearly the market's going to be very focused on the retail stocks. All the big adverts are starting to appear on the telly for all those names that we know, Debenhams, Marks and Spencers. So keep an eye on those. Again, if there's a cold snap coming up, everyone will get very excited because all the warm weather stuff will start to fly off the shelves. So keep an eye on the British Retail Consortium statistics, footfall numbers for the bricks and mortar high street retailers. The market's generally going to be looking for the online stocks to come out on top. ASOS is probably the granddaddy there. But the multi-channel ones like N Brown and Sports Direct, you'd expect perhaps to have a pretty good run as well. But keep an eye on those statistics until we get to January, first 2, which will have all the big trading statements.
Okay, thanks, Russ.
Pleasure.
So lots to look forward to, meaty Monday and, of course, Christmas on its way. We'll be back with you in 2 weeks' time. Until then, goodbye.